let's talk business. And of course, the drill is still the same. We want to help you. 2019, we have that hashtag going. You must make money. And so here in Business Updates, we'll do just that, show you how you can make money and what to do, what not to do with regards to making sure that your money or investments are actually safe. And so remember that number that we gave you, of course, a few days back, telling you that you can actually share the challenges that you're facing in your business, and that here on Business Updates we're going to give you solutions. I'll just read that number again, and of course it will be coming on your screen. Now the number is 0750-933-088. 0750-933-088. We need to touch on your business and just give you, this is pretty much like free consultancy to give you solutions to the challenges that you're facing. Now in terms of investments, let's talk about something that most of you shy away from, thinking that it's just a space for the big boys, beg your pardon, and we're talking about the stock exchange, Securities exchange. I'm sure some of you are already frowning at that name. So we're joined by Mr. Keith Calligata. He is the CEO of Capital Markets Authority, and he's here to tell us that, you know what, even you can invest in that particular space. Welcome to the show.
Thank you.
You're welcome. Let's first just demystify this particular myth. People hear of stock exchange, security exchange, financial assets, and they just like keep off, you know, thinking that it's a space that is just meant for them that have a big wallet or big bank account. What is this space? Just break it down for us.
Thank you, Mala, and thank you, NTV, for having me and for having us here. Good morning, viewers.
Good morning.
Financial assets, basically, there's a whole range of investment opportunities. There's equities, there is bonds, and there's real estate. Real estate tends to be the most dominant form of investment opportunity all over the world, but the returns on equities tend to be the highest across the world. Bonds tend to be the most secure. They give a fixed return, which is guaranteed most of the time, especially if it's government bonds. So financial assets include essentially equity and government bonds, or corporate bonds, basically debt and equity. So the key role of the regulator is to make sure that the people who are playing the actors of the financial intermediaries, providing the service that they should provide, they're capable, they're competent. We continuously inspect them and make sure that they're doing a good job. They're handling customer complaints on time. Essentially to give confidence to all investors, current and prospective investors, about the prospects of investing these assets, and making sure that they get the returns that they should get on time. Yeah. Okay,
interesting. And we'll be getting into the frequently asked questions with regards to this particular space. But just tell us today, what are some of these ABCs or requirements that people need to meet for them to get into that sector, just as beginners? If I look at myself, we have viewers who are watching and maybe they're thinking, do I qualify? So are there qualifications really, or what are the basics for me to start playing in that sector?
I think the basics is that you should have some savings. I should desire that you should have the desire not to lose your savings. So the first thing you want to do is protect your savings from erosion. We all know about inflation.
Right.
Every year there's inflation ranging from about 2 to 5%. I think the central bank's target is 5%. So if you keep your cash in the bank account, not earning any interest, you're going to actually be losing 2 to 5% every year. So the key is about protecting your assets against inflation. We're also trying to grow your assets. Equities tend to grow more faster than debt. I think the total return on equities in the Ghana Securities Exchange since inception, since we started about 20 years ago, has been on average about 18%.
Oh.
Year on year for the whole range of assets, and that means that if you're invested in all the equities, all the 9 equities or the 8 equities until recently, you get an average return of about 18%.
Brilliant.
Now the average return for bonds, government treasuries, is about between 12 and 14%. Also depending on when you get into the market, sometimes these rates go up as high as 18%. So it's also about market timing.
Yeah.
So if you time the market well, you could get reasonable returns from bonds as well.
Let's talk about risks, because someone once told me that the safest place to put your money is of course, in government bonds. Are there any risks? Of course, I know they're not, but just break it down for us. People say that it's actually a low-risk investment, pretty much. So allay those fears.
Well, the likelihood of governments defaulting on debt is very, very low. I think right now we're seeing countries like Mozambique that are struggling, also Greece struggling, but most governments around the world will prioritize debt settlement. So you're actually essentially lending to the government. And the higher the credit rating of the government, the more likely you are to get paid. The lower the credit rating, the higher the risk.
Right.
So that's why you hear about the Standard & Poor's and Moody's carrying out credit assessments, credit ratings of countries. And Uganda is in a good place. I think our credit rating is reasonable. So the likelihood of Uganda government defaulting on their debt is very, very low. So it's a risk-free asset. It's considered a risk-free asset.
Okay. Interesting. And you did mention about savings. How much are we looking at? Someone watching today and they're thinking, okay, how much do I have in my bank account?
100,000 is enough for starters.
Have you heard that? 100,000 only for you to get.
Of course, but the more you save, the bigger the return. If you save 100,000 in doubles, for example, that's only 20,000. What's your domestic budget every month? Most people spend, well, let me not sort of hazard a guess, but even assuming your domestic budget is about $1 million shillings a month, right? You want to save something where you can see that the return is reasonable enough for you to do something with whatever you're gaining. So the more you save, initially it's good for you to start with some little money, but as you get used, get bolder and save big amounts of money. I mean, I've seen people investing in government securities that in excess of 100 million. You know, the more you invest, the more you gain.
Right.
Yeah.
Right. Okay, let's put you on the hot seat this morning. We have the frequently asked questions that we'll need you to answer to. Of course, these are the questions that come time and again whenever we have conversations with regards to stock exchange, security exchange, financial assets. So the first question is, does the broker dealer charge me for buying my shares? Selling or buying? Yes,
they have to make money. They're in the business of intermediating between buyers and sellers of securities, and those who are basically between buyers and sellers of securities. So they earn a commission for that. They do research, so they have to be paid for their research, the work they do, and that's why they earn a small commission of about 2.1%. That commission is shared between the brokers, the stock exchange, the capital markets authority. We also have to earn some fees from that process for regulating the market. And the depository where the securities are deposited.
Right. And the question would be, now that they're getting that commission, is it me paying them directly, or there's a way they tabulate that, pretty much?
If you invested $1 million shillings, 2.1% of that is what is charged. It's just sort of deducted from every trade you engage.
So it's with the deductions?
Yes.
Okay, all right. Second question, how can I benefit from investing in unit trusts?
Unit trust, yes, that's a very good investment opportunity actually, because unit trust managers decide where to invest, in which stocks to invest. They make the investment decisions for the investors. There are about 5 unit trusts that we license right now. There's Britam, there's Zeno, there is ICEA, there is Stanlib, and there is UAP. And they're tax-free. So
interesting.
But there's a charge. The charge is a little bit higher. It's about 2% per annum in annual management fees. But that helps. Essentially, it's an easy way of saving for the long term. And I really want to urge people to consider saving through CIS's collective investment schemes or unit trusts, because you're able to put aside a certain amount of money every month for as long as you want.
Right.
5 years, 10 years, 2 years. The challenge of one-off investments that we were talking about earlier is that it doesn't sort of help you to grow your portfolio or your assets. But if you put aside, even if it's $500,000 shillings or 100,000 shillings every month for 10 years, you're able to grow your assets a lot more, and you're able to do a lot more with the assets eventually when they grow. So it's advisable to invest through collective investment schemes.
Okay.
Yeah.
All right. Moving on, the third question, frequently asked questions. That's what we're looking at today, and he's on the hot seat answering those questions that you've been sending to us with regards to the same financial assets. You need to make money this year. Now, the third one is, what do I need to invest in collective investment schemes?
I think it's a typical KYC, fill a form, proof of residence, copy of your national ID, photographs. It is the usual. It's just very similar to open up a bank account. The addresses of these fund managers are provided on our website. You can easily find them, walk to your nearest. They're all good because we license them, and we only license the good players. And start.
Right.
It's as simple as that.
Oh. Interesting. Very simple.
The minimum amount is 100,000 shillings as well. So, but as I said earlier, the more you invest, the more you gain. So it doesn't make sense for a person like you to invest on 100,000 shillings. Your net worth is probably, a lot more than that. So invest a significant amount of money.
Right. Yeah. And I think the conversation today is just start with the little you have.
Yes.
Don't wait until it grows. If you have 100K, just start there and then grow it with time. Okay.
I know most people want to invest in hard assets like land, but how long is it going to take you to accumulate the amount of money you need to buy the smallest possible plot of land, 5, 20, 25 k's from Kampala? It's going to take you a long time, but you need to start.
Interesting. And the conversation about land, I think we need to bring you back to have that conversation, because land is becoming quite tricky, especially now that we have a lot of land disputes coming on board. You never know whether you're investing your money is in a clean piece of land. It's quite sticky and touchy.
Population pressure, of course, that's bound to happen.
Interesting. So just get your money to stocks. Okay. The fourth question is, what collective investment schemes, what are they? Like collective investment schemes, just breaking it down for the viewer.
Three, normally they have money market funds, which essentially invest in fixed deposits and debt and government debt or treasuries or corporate bonds as well. The equity funds that invest in some of the shares in the stock exchange. Then the balance funds, which essentially the fund manager invests in a combination of equities and debt, depending on how whatever they feel is a growing equity, because not all equities are growing at the same time. It all depends on the performance of the companies. So these managers are paid to do that analysis, and they make the investment choices on your behalf if you invest through a unit trust or CIS.
Then the question I think many normally ask is, how then do I know the performance of X company? Is this information readily available?
They publish the results every year. Whenever they should publish the results within 3 or 4 months of the financial year end. But again, trying to do it yourself, even if you've done a BCom finance degree or something like that, it's not easy for you to know. So it's better you rely on analysts. And analysts are normally hired by the CIS managers and the brokers. That's their job, essentially, to do the analysis on your behalf.
Right.
So trust them. Trust them, because we are overseeing what they're doing. So your money is safe, your investment is safe.
Okay.
And that's why you have a regulator, a competent regulator that makes sure that there's confidence in the system at all times.
Is the space pretty much safe with regards to having brokers who are not compromised by maybe some companies who want to get a lot of people on board in terms of them getting shares and all? Is it regulated to that extent whereby you can actually say that these brokers are totally non-biased, and when they're giving information to clientele or investors, then it's clean and authentic information pretty much?
One of the things we do is to make sure that brokers do the job they're supposed to do. And if we find that they're, giving wrong advice, they're trying to take advantage of, the unsuspecting investment public, our job is to sanction them. We can even remove their license, and that's why we license them every year. The licenses are renewable on an annual basis. So yes, it's possible, but our job is to make sure that they do what they're supposed to do, and if they mislead the public, they're sanctioned.
Interesting.
But we want to think that they're all professionals. We urge them to continuously train. Many of them are going to be getting onto our capital markets certification program very soon. So we have to keep making sure they build their capacity to make sure that all their staff are competent at all times.
Okay. All right, so it's a regulated space.
So we're regulated, it's safe.
Very regulated.
Yeah.
Okay, question 5. How many stock exchanges do we have in Uganda? How many stock exchanges do we have in Uganda?
We have 2.
Okay.
There's the Uganda Securities Exchange and there's Alltex, which started about 4 years ago.
Okay.
Yep.
Your question has been answered. Okay, number 6. Question 6. How many companies are listed on the stock exchange?
9 Ugandan companies are listed and 8 Kenyan companies are cross-listed on the Uganda Securities Exchange.
What exactly happens when a company wants to be listed in the stock exchange? Someone would argue we have a lot of companies, countless companies, but having only 9 in the space?
Yeah, it's a little bit unfortunate. And these 9 the 8 were largely out of government privatization. Actually, the 7 were out of government privatization. Umeme, a government concession kind of. We had CIPLA recently. Well, what companies need to do essentially is to decide that they want to grow fast enough, and bank financing is not sufficient or is a little bit impatient, because many times companies, from the time they invest, there's a long lead time before they actually start generating revenue. So companies need patient capital. So once a company decides that they're organized enough to go to the public, and they've got books of accounts that can be scrutinized, they've got no liabilities, like hanging tax liabilities that could erode their value, they hire an advisor to prepare a prospectus, submit it to us for approval, and go to the public to raise money. And that capital raising through the public market is best done through the stock exchange. It's possible to do a capital raising through a private placement from the public,
right? But
for the purpose of ensuring you get the right value for your shares, and the shares are easily tradable, it's best done on a stock exchange.
There was this conversation, of course, a few weeks ago, actually 2 weeks ago, and we had the president saying that that multinationals need to open up their spaces for Ugandans to also own the parts of these companies through shares. Do we say that then for us to increase these numbers, now that we are only at 9 Ugandan companies pretty much in the stock exchange, do we say that now we bring in a policy whereby if you meet X standards, you just have no choice but to open up your company to public sharing through shares?
I think, yes, it was a recommendation. I think he advised the companies that it would be a good idea for them to float their shares on the stock exchange, especially the biggest companies, and particularly those that came out of the privatization program, because these were formerly government companies. So it would be a good idea for them to actually, give Ugandans an opportunity to share into their success. Now, traditionally, the stock market is supposed to be for purposes of capital raising. But what we're seeing around mostly is exits, where companies have grown, they're successful, or government is trying to exit, and they sell their shares through the stock market. But I want to see more businesses coming forward to raise capital to plow back into their businesses to finance the growth of their businesses. Right. And that's the real purpose for the stock market. That's the traditional reason why it was set up many years ago, in places like the US and Europe. So we want to see that happening a lot more in our economy. And because we believe that patient capital can really drive the growth of companies a lot more rapidly than bank finance can. And that will help to create jobs, help increase exports, increase taxes. So that's really one of our key public education campaigns that we're on right now, to get companies to be aware of the opportunities and benefits of non-bank financing.
Right. And you've mentioned something very important, and it touches on the risks that many have with regards to investing in that space. And this is when a company exits. What then happens if we have quite a big number of people who actually bought shares and a company wants to exit? What are the controls to ensure that people don't lose out on the investments?
Look, if the company, it's not the company that exits, the shareholders of the company that exit. The company remains doing business in the country.
So if a company gets into that space, it's there for good?
It's there for good. You can just change ownership through sales to other shareholders, but the company remains doing business in the country.
And if it stops doing well, what happens?
Well, you sell the shares. That's why if you're publicly quoted, you need to continuously do well. Yes, of course, revenues go up and down depending on market conditions,
yes.
Changes in the business environment. But that is why the fund managers or the research analysts who are doing this analysis on your behalf, the brokers who are advising you on which shares to buy, continuously monitor the performance of these companies. Okay. And if they think the company is not doing well anymore, they advise you to sell the shares and buy other shares.
Okay, so it's good to have the broker as your best friend.
Yep.
Well, they will get to tell you and give you all this information.
If you open a brokerage account and they do research, they keep sending you email alerts periodically from what is going on in the market.
All right. Yeah. Moving on, the next question 7 is, what is a share certificate?
A share certificate is sort of something to do with the past. We used to have share certificates that show ownership, that confirm that you've actually got 6,000 shares in this company. But we moved away from that about 4 years ago. We now have electronic sort of evidence of ownership of your shares in the depository.
Which is more efficient. Which
is actually a lot more efficient. Unfortunately, right now, most Ugandans still have share certificates. There have been several calls for them to declare them to the stock exchange so they can be demutualized, but that's not happening. I think only about maybe 10% or 15% of share certificates have been surrendered. So more needs to be done by the companies, the investor relations departments of the companies, to get those people who have share certificates to surrender them and get electronic evidence of ownership.
Okay, all right. Thank you so much. I think you've answered all our questions, the frequently asked questions whenever we have conversations on financial assets, whenever we have conversations of security and stock exchange. Thank you so much for coming in studios, the CEO of Capital Markets Authority, Mr. Keith Kalegera. Thank you so much for being part of our conversations this Friday. It was, it started off on a fun note and now to serious conversations. But you say that you must make money, guys. You must make money. The hashtag will always be #morning at 10 TV. Be sure to join us yet again, Monday to Friday, 6:30 to 9 a.m. Have a blessed weekend.
Watching more